All right, let's take that forward with another conversation that we've lined up for you today. We have the partner and head of South Asia at Quadria Capital joining in, Sunil Thakur, and he obviously joins us for our special fundraise segment. This after the company has gone ahead and closed a fundraise of nearly $1.07 billion. Thanks a lot, Sunil, for joining in. What is driving this strong demand in a tough fundraising environment, and what are the themes that you're looking to bet on through this?
First of all, thank you, Mangalam Ekta, for having me on this show. As you rightly mentioned, we're just coming off a successful fundraise where we raised upwards of $1 billion, 20% higher than what we were targeting. Wasn't easy, especially the challenging environment that we are in, where the global fundraise environment overall is going through some tough times. In fact, it's down by some 70 to 80%. So global funds are down by global fund in terms of fund closes are down by some 70%, and Asian fund closures have gone down by some 80%, over 80%. We've been successful. More importantly, the reason being is our track record and the strategy that we follow, and a strategy of identifying the right segments within healthcare, as we are a healthcare-focused fund, primarily focusing on few large markets in Asia, predominantly India and Southeast Asia. So our ability to find niches, our ability to find the right geographies to invest, and the execution strategy is, I guess, what has made us successfully. And that has been well demonstrated by the track record that we have, which has been appreciated by investors who've come behind us to support us in our investment activities.
Okay. Sunil, I just wanted to, and firstly, welcome to the show. This is Ekta. Just wanted to ask you to elaborate on this tough fundraising environment where you said, the fund closures, for example, in Asia are down by around 80% odd. Since when are you seeing this trend? What are the key reasons for it? Is it because of this, because of the trade negotiations and the uncertainty around that? Is it more? And what can we expect in terms of a trend?
So, a couple of reasons. So, in terms of since when are we seeing these challenging fundraising environment? It's been over 3 years now. And if I just share some statistics, since 2021, which was the peak time of fundraising, as I mentioned, global funds, their closures have gone down by some 70%. Funds which are focusing on Asia, their closures have gone down by some 83%, over 83%. The primary reason has been a lack of good exits globally, which was most importantly affected by the interest rate that we saw over the course of last many quarters. And therefore, the ability for people to churn capital back into this asset class was a bit limited. The second trend that we saw was the mega funds were getting larger allocations. So there was this concentration of capital. So the big funds, which we were raising $15 billion, $20 billion. So, the entire alternate allocation was getting anchored around those mega funds. And therefore, mid-market funds, which were in the zone of $1 to $2 billion, they were impacted quite a bit. And third, because of this lack of dry powder from the asset itself, we were seeing some structural shifts in how alternate investments were being allocated to different strategies, like secondary buyouts and all of those other products. And that all impacted funds like who were playing in the target zone like ours.
Sure. Sunil, just wanted to now focus on the fund that you all have closed. It's the third fund that you all have closed. Just give us a sense. You're deploying around $700 to $750 million in India. What are you targeting? How much of it is already deployed? Where have you deployed it?
So roughly over 1/3 is already deployed, and this is across the regions that we are investing in. We are obviously looking at a few specific trends and themes that we believe are going to be the winners for the next few years. And some of them that I can share are, models like localization, make in country for the country, outsourcing. There is a big shift happening to some of these strong supply bases like India, Vietnam, and few other geographies in Asia, especially given the geopolitical situation and regulatory environment that is coming about. People want to diversify their supply bases. So India is obviously gaining quite a bit from that. The third is consumer healthcare. Fourth is enterprise digital healthcare models. And fifth is, the consolidation place. So these are 5 themes that we're going after. If I have to share some specific segments that we like to invest behind, single specialty is something that we are very, very keen on. And we believe the next decade is going to be of single specialty pharma, diagnostics, enterprise digital healthcare models. These are few models that we believe are going to find traction, and we will go behind these models to invest money in.
That's interesting. You preempted my question with regards to single specialty versus multi-specialty, and you've said that you focus on single specialty right now. But, just for the viewers' benefit, what is the kind of IRR or value creation benchmarks that you have before deploying, money into any of the companies that you are backing? That's point number one. Secondly, everyone's talking about semaglutide. Do you think there is value to be created there? And the third part is the CDMO API story. How are you looking to participate in that?
So single specialty, yes, we believe that is going to be a winner in the next few years. As far as semaglutide is concerned, there are various models that will come about, but maybe a bit early. But some green shoots that we are seeing are on the manufacturing capacity side, where we are building up capacity for the demand that we see once we have many products or generics being launched next year and beyond. But one model that we are specifically keeping an eye on is on the digital healthcare model, because as you know, the success of these medicines doesn't only depend on taking those medicines, but how do you sort of layer it with assistive care, behavioral change models. So we believe if it's packaged with the right digital healthcare model and support system, you will find clinical success. And we have some examples in India. There are companies like Beto and all that are working with a few companies to sort of bring about that model in the market. As far as the question around CDMO API is concerned, we believe there is a great opportunity, especially in the CDMO space, given that we are seeing geographical diversification. Especially the China plus one model in some ways is playing out on the CDMO side, and we've made some investment in that area, and we see that those models to be big winners in the coming few years.
Okay, just before we let you go, Sunil, just wanted you to touch upon 3 of your investments: Aragen Life Sciences, Nephroplus, and Maxi Vision. How much have you all deployed in these 3 companies? How much do you all own, and when do they probably IPO? What are you expecting in terms of return? And by when?
So hopefully we are expecting good returns. And sorry, Mangalam, I couldn't answer the question, although it's a tricky one, but we try and solve for our organic growth of at least 25%. That should be the minimum return that we would expect from companies that we invest in. And that is what we are hoping for to solve in these the 3 companies. But to answer your question, we've deployed about 1/3 of the fund or allocation to India in these 3 companies. All of them are recent investments, and therefore we do have some time before they hit the market, or we look to do an exit from these 3 companies.
All right, 25% IRR is what you're targeting, and that's what you're expecting from all of them as well. 40% of your fund already deployed. Thank you so much, Sunil, for joining in. Wish you good luck with the remainder of your deployments, and hopefully that turns out to be a good investment in terms of wealth creation, but more importantly, impact as well in the healthcare space. Take a short break, come back. We have Sumit Kariwala, who's the India Banks analyst, joins us from Morgan Stanley. Stay tuned.